Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, December 20th, 2024. S&P 500 currently sitting at 59.68. I'm David Zarling, and I'm here with part-time in-house doctor and Santa's helper, Ian McMillan. You got all the things planned for the kids for next week?
We're wearing many hats. We got thicknesses. We got holiday,
Yep.
but grateful to be here. Another year in the books, Dave.
Yeah, we're getting close, aren't we?
Another year in the books and another year of a bull market. I don't know what happens next year. I'm just saying this year was a good year for the market.
Yeah, no one knows. I will say one thing that makes me nervous is in 24, you know how all these firms come out with their estimates and where the S&P will be at the end of the year?
Yeah, oh gosh. Yes, it is that time of the year where we get neat, cute little estimates from
Yeah,
people on the sell side.
Yeah, people making predictions that shouldn't be. And once you know it for 24, they all underestimated. Now for 25, we're starting to see some of those numbers perk up, and that makes me a little bit, But until price confirms, and I know we had a little shot across the bow this week, but still within an uptrend. I mean, markets don't move in a straight line. Well, what did we have go on this week that is worth highlighting for our listeners?
So Wednesday, a rough day, everything down. I think 89 or 90% down day.
Yeah, it was actually a 93% of stocks
Wow.
in the NYSE down on Wednesday.
Right. So then, and breadth had been, I'm not going to go into the breadth was weak category. Breadth had been waning for a bit. And even, you look at the S&P going into Wednesday, you've been sideways for 2 weeks since November 29th. Yeah,
Well,
it was one of those that things. That's what, at the quote unquote event, there was a Fed. I don't know. Did they raise interest rates or what?
Yeah, they did something. I don't even know. They did something.
They did something, and people and the computers sold stocks, and
That's the story they tell. And that same with I suppose people could be, I suppose you could say the continuing resolution bill that got put out there and then repealed. It could be the Fed. It could be, there's always going to be a narrative. But what we know is that price moves first and then the narrative is set, right? Because where were all those people saying if they do a 25 basis cut move or whatever it was, that markets are going to do this. You can't live off prediction. You got to have a plan. And to highlight your point about breadth waning, and this isn't really a fair way to do it, but hopefully it paints a picture. But, something like the Dow Jones, which is only 30 stocks, but also something like small caps, which is 2,000 stocks, declining for, 9 or 10 days in a row, while your large caps held up steady. And again, I know people will struggle with me using those two indexes, breadth. I think it's just kind of a characteristic. You could highlight that you had those indexes down anywhere from 8 to 12 days straight while S&P was flat. And that's a market cap characteristic.
yeah. So the S&P, maybe kind of got 2 days of it so far. At least we're here on Friday. So far, a good-looking daily candle that would, negate some of Wednesday. We'll see where it closes. Short term, shot across the bow. Intermediate, long, hard to say that a ton of damage has been done. Certainly not long term.
Well, we have price levels below us that would give us clues. Like, let's say, we're recording this before a market close on Friday, December 20th. Market's allowed to do what it wants to do between the end of this recording and when market closes. If we close below the open today, okay, that would be, I want that, but that would be information that the selling is not over and that the market is in search of buyers. But we do have some pretty good mathematical levels, price levels below us that would give us clues on who does really have control, or is this just part of normal discounting mechanism of trends? Because the 200-day moving average is sitting, right below 5,700. You have some point of controls from the move up where you have equilibrium between buyers and sellers that are sitting near 5,800. You have the high from summer that's sitting at 5,800. So there's some levels here to pay attention to. Do buyers or sellers have control of this market? Your point is simply, yeah, maybe we go into a correction and that's how Wednesday is how it started, but there's no way to know that ahead of time. And
no way to know. If you're a trend follower.
Right. Because you could also have made the argument back in August and July, that, was that the beginning of a new correction? What happened in July? And once July was over, the market rose, another 15%. So if you had been out at that time because of that move, you'd have lost out on that opportunity. And that's just how trends work, is they don't move in a straight line. And we still have rising 200-day moving averages. And in some ways, you could make an argument that that's some type of breath flush that happened on Wednesday. That you just had a lot of stocks go search out their 10-week moving average or their 50-day moving average, right? Because you saw a big jump in stocks that did that. And that happens in uptrends all the time, where you come back and test your prior 10 weeks of information average or your prior 50 days.
Well, you and I talk about it on the side, offline. I mean, all the time. Like, listen, months like November are, and you get to watch the run up and you make a lot of money and it's great. But that even in there's going to be some type, there's going to be some time of punch to the gut. I think if you accept that beforehand, it's a lot easier to sit through a Wednesday and Thursday.
Well, yeah, we know that the average year is going to have at least one 10% corrective move and multiple 3 to 5% moves. And what's interesting is just the volatility spike we saw on Wednesday. And I don't think it's coincidence that rather than talking about the Fed or continuing resolution bills, that we've got a trade weighted dollar above 107.
Yeah, that was not great. Well, in the current, you want to call us, we're still in the strong, we're in a strong dollar is bad, market mindset right now. That can change or whatever. But yeah, the dollar breaking out above 107, an area it has tested quite a few times. It's 106, 107, back to where we were 2 years ago.
Well, you've highlighted in the past on here that there's times where strong dollar is good, and then there's times where it's bad, and these correlations go in and out. For example, dollar's been rising pretty strong since October, the start of October, and S&P had been moving along with it, but now that we're above 107, which is this behavioral level that goes back, what did you say, 2 years?
Yeah.
Where they've sold it in the past and we're now above that. Now you open up your mind to the possibility that if the dollar continues, then maybe that's not great for risk assets, because even something like Bitcoin pulled back. So we'll see. What other things, are there any, lines in the sand that you're looking at on any other, you shared a nice internal chart about small caps.
Yeah, small caps and mid caps. Again, we're getting the bounce today. We're below our pre-election closing. So that Tuesday, November 5th.
Yeah.
Before we got the gap higher. Small caps and mid caps back below there. Failed breakout for Russell small caps on this. Like, if you use IWN, let's call it 230. Same thing. We had this in 2021. So we'll see. It can fix itself, but unfortunate. Maybe it goes sideways. Of course, I wish we could have gone sideways above support But
Wait,
it's
the
not
market
the
doesn't
cards
always-
the dealer dealt me. It's
I know,
frustrating.
Yeah, the market didn't give you what you wanted.
I didn't get pocket aces.
We are entering game season for at home, like with your kids and
Oh yeah.
teaching them card
Big.
games, teaching them, hearts, spades, euchre.
Yeah, you're inside for the winter.
Yep.
Better bust out the cards in the board game.
They're fun, man. It's a way to get the kids off their devices, get interacting with anybody.
Off the devices.
What games do you guys play?
Candyland classic.
Oh, nice. Yes.
We're in the math stage too, so honestly, like flashcards are fun, like math flashcards.
Right.
He enjoys those. We have like a bingo, like an NFL bingo that he likes to, it is a bingo. Yeah. Yeah, like spin the wheel. It's like NFL mascot bingo. Loves that.
Oh, that's awesome.
Yeah. So those are, and then puzzles. He's a big puzzle kid. So puzzles are a good indoor activity.
Yeah, puzzles are fantastic. One of my favorites. My wife always does a puzzle over Christmas. It's just a thing she does with her sisters and her mom. Typically wine is involved. I don't know if that helps him or not.
Do you tell her that you do a puzzle every day called the S&P 500?
I do. They rearrange the pieces out of me.
Yeah, overnight. Like, hey, I had a lot more of this puzzle put together when I went to bed.
That's right. Who's been messing with my puzzle? Well, the new game in our household but I think you're gonna have to wait till your boys are a little older, not because it's like PG-13 or anything like that, but it's called the Chameleon. It's really good. Like the way everybody gets dealt a card and then you roll these two dice and then it tells you on the card, there's like a grid that you look at and it's, it might have a theme like, I don't know, countries of the world. And everybody has a card that tells them where on the grid, which country it is. And then they give a clue about the country that they're looking at. But someone's a chameleon. They get handed a chameleon card and they have no idea which country it is, but they kind of listen to people's clues and try to figure out, and that people have to guess who the chameleon is. Fantastic.
Okay.
There's a lot of figure pointing. It's great.
That is
You
great.
would enjoy that.
Are your kids, your two oldest are home for the break? Are they done with exams?
They are done with exams, finished strong, home for break. The house is full. We're down to 3 teenagers. My oldest just turned 20. And it's a great time. And I'm thankful for the driveway we have because
Yeah, I bet you are.
We've got 3 kid cars out there. And with the snow falling, it's kind of hard to get them off the street. So it's great that we're able to do that. But it's great, man. It's great to have the kids home. Even when I annoy them, it's great. It's a great time.
It wouldn't be home if you didn't annoy them.
Yeah, correct. That's my job. I tell them that all the time.
So dads do.
It's what I do. It's why there's literally a category called dad jokes. It's where I live. So you and Kevin did a great job last week covering a variety of topics. We talked a little bit about S&P 500, the Dow, small caps. What about like sectors, slices of the market, whether it's for the year or the last few months? Because one of the things you want to look at is we've had such a strong uptrend this year, is really where that strength came from, but just as importantly, where it didn't. And then where did that match up with Wednesday's shot across the bow? Were there any things that held up better than others? Any insights there from a sector perspective that you're looking at?
So, I think pretty good year. All sectors finished green. Your top sectors for the year: communications, financials,
Wow,
discretionary, and utilities. So a good mix. I don't think you can say that was a heavy growth year, a heavy value year. I mean, we had a great bull run and we had utilities above industrials, healthcare, energy, materials. And then you want to take it a level below that to sub-industry. Another good year, semis. But then you had Argentina. You had big year for the crypto names, especially later in the year.
for sure.
We talk about these a lot internally within financials, capital markets, and securities and broker dealers and exchange home builders actually had a pretty good year.
So not exactly risk off by what you're telling me.
Not risk off. High beta outperforms. I mean, you've had a really good smattering of everything, I think. Yeah, a little techie-ish. I don't know, like everything's kind of tech. I mean, what's that saying? Like, Tesla's not a car company, it's a technology company.
Oh, sure. Right.
Amazon's not a mall on the internet, it's a technology company.
Right.
I kind of buy that heck, Visa's in technology now, the stock. It's in the technology ETF.
Yeah, fintech.
Yeah,
financial tech.
There's a lot of gray area there now in general.
What's interesting too is even commodities using something like GCC is likely to finish positive on the year. You know what isn't going to likely finish positive on the year? Good old-fashioned long-duration government treasuries.
Oh my gosh. Well, yeah, it's hard to finish negative. Man, they just this week almost went back to 1-year lows, back to where we were in November of last year. We're getting a bounce today. But absolutely, it's just tough. I mean, I guess if you're there for the income and you're going to hold it for 20, 30 years, I guess get your cash flows. But you could get those in short. You should get those in you can get the same cash flows in T-bills.
Yeah, correct.
And get the capital appreciation.
I mean, we're still 92% away from the highs in 2020 for TLT. And you look at AGG, right? The aggregate bond complex.
Yeah. So is it bad across the board?
Well, using AGG, you're still down 18% from the highs. And to get back there is 23%. But, you brought up T-bills, right? T-bills didn't have that type of decline and they still pay out about a 5% coupon. Your CLOs and your middle tranche triple Bs doing better, even like your things over in the Pacific.
I mean, junk bonds, the worst bonds in America are up. How much this year? Probably 4 or 5% without the dividend.
Yep. So, I mean, the 60/40 portfolio, I don't know how many times we have to say it, is really under duress.
It is. And it's a rising rate. I mean, you cannot be shocked when rates go sideways for 3, 4, 6 months, a year, and then they resolve to the upside.
Right.
You can't.
The rising rate environment began in 2020. I just don't think that's getting enough coverage. That it's likely that your kids are going to be in their mid-30s, Ian, until we see the return of a falling rate environment.
Yeah. And you see, I mean, Kevin sees this a little bit more than I do. We had transfer in last week and, you're in there, right? Shifting them out of what they were in at their previous advisor and into your models. And so frustrating to watch just the exposure to long-term treasuries because it's part of this textbook. Well, they need fixed income, right? This is their risk tolerance says they need fixed income. Okay, I'm okay with that. Like I can meet someone there, but then do the extra 15 minutes of work and figure out what pieces of fixed income are in an uptrend. It doesn't take that long.
Right. You can do the work.
You can do the work. And it doesn't have to be a one-off. Have models. Don't have anyone involved. It's frustrating because I know it can be done. You do it.
Please tell me it wasn't one of those with 1,000 positions in it.
It was, 15 or 17 different mutual funds. And of course, they had a mid-cap core and a mid-cap growth, big alpha generator there. I'm fine with being mid-cap, but pick one. I don't know. Again, it's one of those things that screams, I don't know what's going to happen. I also will meet you there. I don't know what's going to happen either. But I can put more effort into it than we can put more effort into it than
throwing darts at the board,
throwing darts in the board and saying, well, here's 20 things. And I know at least 5 of them should do pretty well.
Yeah. We should be able to create a math problem and then solve it, also known as ratios.
Yeah.
Put all your fixed income funds or ETFs versus AGG, if you have to hold fixed income, and see which ones are in an uptrend and which ones aren't, and keep it that simple. And then do the same thing with your equities, right? Keeps you out of trouble with international equities, with the exception of Argentina and a couple others.
Keeps you out of long-term treasuries.
Because part of the process is it's not only what you own, but just as importantly, what you don't. What you don't own. And there's a process for that. Again, like Ian said, we don't know what the market's going to do. We don't. But we know that factors such as momentum and trends exist in the market.
Yeah.
And we might as well use those probabilities and tilt them in our favor, that those things that are trending will continue to trend, including ratios. So put those in your favor, put them in the portfolio. They're not 100% guaranteed. They never are, but at least you're increasing probabilities rather than increasing probabilities the opposite way, that you'll continue to hold a loser. And then you're in a psychological conundrum because you can't sell that now.
I agree. I think to your point, it's not some magic potion. No one's saying that be a trend follower or bat 1,000, but from a risk reward standpoint, I think what's been proven over, market's been open 140, 150 years. It's been proven that the market is, at any given time, the market is more likely to just keep doing what it's been doing. And that's how you get trends. That's why the Dow has gone from 40 to 45,000 over the last century.
The infamous Marty Zweig said, the trend is your friend until the end when it bends.
Yeah. And that's an art, right? I don't know. Is Wednesday the bend? Was leading up to Wednesday the bend? Well, I mean, it depends, right? And that's up to you, the investor, the trader, to decide what a trend is to you. Doesn't have to be the same as it is to Dave and I.
Yeah, for us, it's relatively simple. Higher highs and higher lows, that's one way. And then when you have a rising average is another way. And right now we continue to have both. We have a rising 200-day, in many aspects a rising 50-day, and you have higher highs and higher lows. Till that changes, it's an uptrend.
Can be on a 15-minute chart, can be on a monthly chart.
Yeah, I know that's not sexy. I know it's not pontificating about global macro or geopolitical or different accounting metrics. I know that's, those are more fun topics around the Christmas fire than trends. But I rather be involved with trends and make clients money than come up with my own story and not.
I would just probably never be involved if I was worried all the time.
Yeah. Worry is a big one. Well, that's just it. Trends are a psychological and bias bodyguard.
Yes, they are definitely a bodyguard. The day's like Wednesday. You're like, okay, well, this has to be it. It's end of the year. They don't like Trump. Everyone wants to be out. We're up over 20% for the last 2 years. They're not going to get their omnibus bill. Elon's making decisions, but, that doesn't affect the trend of anything.
Right. And the flip side is true too. When there's a downtrend,
yeah, that's true.
That helps you stay emotionally stable for those events as well.
In August, we're supposed to do the rollover with the yen event.
Yeah.
That was a bottom. And we had gone down for 2 weeks into that August 5th. I'm pretty sure it was Monday, August 5th. We had gone into that. Something happened Sunday night. Markets gapped down. Well, now it's some yen thing. I don't know. It's much better for myself and my family if I just don't go into worry about those things too.
Right.
I don't know, yen. I'm not going to read about it.
Yep. Turn off the TV. Go play a card game. It's the best way to go about it, really.
And guess what? There was a nothing burger.
Right.
Eventually we'll have a something burger.
Yeah. Yes. Yeah, we will.
Fat something burger.
Yeah. As we've said in the past, shut up and enjoy the trend. It will change. There will be a day. And I think one of the first clues to look at would be if we're supposed to be seasonally strong now through April.
Yes.
What does now through April actually look like? For example, the second half of this month is supposed to be strong. That might be clue one. If we don't have a second half of December that's strong, that would be a point to sit up and take notice. Okay, maybe buyers are starting to lose control of this market. And especially if Q1 of next year we don't follow through, that would be information too. And then if that's happening, it's also likely happening in conjunction with losing important price levels in the market. I wish I could make it more complex and sound smarter, but I'm just a dumb guy using technical analysis for my edge. Really what it comes down to.
All you know how to do is draw squiggly lines.
Yep. Look at a chart, thousands of them, thousands of charts. So what else, Ian, do we want to highlight?
Good year for crypto.
Yes.
Talked about that, but the Bitcoin, I mean, we're back under 100,000 right now, which is, of course, a big thing to talk about it. But overall, I mean, huge year for crypto. We came into the year, Bitcoin or 43,000. We made it up to 107, currently 90s. Let's see how that plays out. And a lot of that was nothing. I mean, we had a big run in February. Bitcoin goes from 40 to 72 in basically 5-6 weeks. Then we do nothing until election night.
Yep, that's true.
Big old fat range for 7 months, 8 months. And then we move from 73 to 107.
You know, I might start using that as like a way to tease my kids. You know, like if they wear socks to bed or they put the toilet paper on backwards, I might call them a communist or something like that. I might just call them a big fat range.
Yeah, it's the big range.
You're acting like a big fat range right now.
Slothy. No one wants to be involved in that. You look like a flat 200 day. I don't hang out with flat 200 day moving average.
Yeah, why you acted like, you let me know when you're in an uptrend and then we'll talk.
Go back to your room. You let me know when you're ready.
That's right. I only deal with uptrends. Figure it out. Yeah, I'm going to use that. See what happens. I'll let you know. I'll report back.
Yes.
Everybody on the
good year to you. I love, and you harp on this so much, and it is so true. It is I think one of the most important things that you've got to just constantly keep in mind is just be grateful. Yeah. Be grateful. It was a great year. We don't know what's on the horizon next year. I hope you were, capitalized. It's been an uptrend. It hasn't been too choppy. I don't even know if we got one. Did we get a 10% correction this year?
Yeah, that one in July. I don't think it.
Yeah, you're right.
I don't think it reached 10% though. It might have been close.
8.5.
Yeah. I mean, for all intents and purposes, pretty low volatility.
It was
for the whole year. And exactly. It's kind of like, when you have a great vista, a great view, whether you're on a lake or, you're sitting on the edge of a ski slope looking over the mountains. Don't worry about other stuff. Just enjoy that view in that moment. Just enjoy the uptrend. Like you said, hopefully you were allocated, participated. There will be a day to protect. This was a year to participate. There will be a year to protect. And we'll know that when certain levels are breaking. It's why we use certain processes and triggers on our side. And I know the partner and supporter of this podcast, Adaptive Select, uses something like that. And Adaptive Select is listed on the NYSE under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. And that supporter, that ETF, uses a metric to identify what type of regime we're in.
Good for them.
Yeah, we've been in an uptrend. There will be a day where we're in a downtrend, and you have to adapt. Not all market environments are the same. And so we've had a nice year this year, but 2025 does not have to be the same. Not all years are the same. And sheesh, how many years have you been involved in markets, Ian? And they're always throwing curveballs. Always rearranging the puzzle pieces.
We've had back-to-back 20% years when we're 2 years off of the bear market. So, statistically speaking, we should have some time left in this.
Right. You're just saying
But
that.
yeah, is it 20%? I don't know. I mean, some years you're negative until December. Some years you're positive, and then it all gets, markets, you can get to January 1st and say, oh, well, market was up or down, but there's also the context of, well, how did that happen? What does that look like on its charts?
You're saying markets don't move in a straight line?
I wish they did. God, I'd be so rich if they did.
Yeah. Would that be great?
That'd be pretty sweet. If they don't.
Your point is, from Volmageddon on, January 2018 on, right? We had the correction in 2018, the COVID correction in 2020, the 2022 correction. So you had, over a 5-year period, 3 corrections of 20% or more, which typically we average 1 every 4. And to your point, when bull markets take place, we're still in like the middle innings, potentially. That's not a guarantee. It's just when we track bull market data, just because we've had an uptrend for 2 years doesn't mean it can't continue. And so you have to err on that piece of evidence that it's an uptrend until it's not. We'll find out. Maybe the Wednesday was the start of something, but we won't know until those levels we mentioned before are broken to the downside. Until we have proof that sellers have control of this market, it remains an uptrend. I wish I had something more complicated to say. I really don't.
Well, you got a couple weeks to think of something. So please, for the next podcast, come up with something much more complex and deep.
I'll try.
Why would I let you manage my assets if you can't even come up with a deep, complicated theory on your portfolio positioning?
Yeah, people do love complex explanations.
What are you dumb? You dumb, Dave? I knew I should have given it to the guy that went to the Ivy League school.
Right, exactly.
He's got 37 positions in my portfolio, and he's got a reason for all of them, Dave.
So true. It's so true. But you bring up a good point. We're not going to record next week, taking a week off for Christmas. We hope everybody that's listening has a wonderful Christmas with their families and enjoys the new year. We'll have a new episode out in 2025. It's crazy, Ian, how every year you get to, let's call it July 4th, and the second half of the year just flies by. I can't believe we're here already. 46 episodes for the year. We hope everybody really, really enjoyed them. Ian, you really provide our listeners great value, and so I really appreciate doing these with you. And I want you to enjoy your Christmas with your family. I know you're doing that next week. That will be, I can't wait to hear the stories. I hope your family feels better, gets better.
Yeah.
And you enjoy it. But everyone listening, thanks for a great 2025. Give us a high ranking on your favorite platform. Make sure you share this with others. And if you're bored over Christmas, you can re-listen to one of the episodes. I'm not going to hold you back. With that, Ian,
your January episode when S&P was breaking above 4,800.
Yeah, that's a good one. That's a good one. Any of the episodes in January will give you a good clue about how we think about things and our process for adapting to different market environments. But appreciate you, Ian. Merry Christmas to you and yours. And thanks everybody for listening.
Have a great weekend, everyone. Merry Christmas.